Hi, good evening, everyone. Thank you for joining us for the live webinar on trading stock indices CFDs with Metatrader 5. This is Phil Gunn, your presenter for today. We'll be starting the session proper at 7:02 p.m. Let's just give a minute for our friends to join us. Meanwhile, you can grab a drink. We'll get started really soon. Hi, good evening, everyone. Warm welcome again for joining us on the Trading Stock Indices CFDs with Metatrader 5. This is Phil Gunn, your presenter for today. We'll be starting the session proper very quickly. Let's just give one more minute for our friends to join us. Good evening, everyone. Thank you for joining us once again for Trading Stock Indices CFDs with MetaTrader 5 webinar. This is Phil Gunn. I'm the account manager with Phillip Futures. In today's webinar, we'll be discussing CFDs on stock indices. Before we begin, I'd like to do a sound check. If you can hear me loud and clear, just type yes into the question box. Also, during the webinar, if you have any questions, feel free to type them out into the question box, not the chat box, but the question box, and I'll address them during the Q&A session at the end of the webinar. Great. Looks like everyone can hear me, so let's just begin tonight's webinar. Once again, welcome to the webinar, Trading Stock Indices CFDs with MetaTrader 5. You may or may not have traded on stock indices before. There are a couple of choices on this. You can trade stock indices using ETFs and futures traded on the exchange. But today, we'll be comparing CFDs with these other two and see why you would consider using CFDs instead, depending on your trading strategy. We'll get into that really soon. My name is Phil Gunn, the speaker, and I've been with Phillip Futures for more than 10 years since 2008. I hold a dual license in futures and stocks, and I'm an account manager to help clients trading in futures and forex as well as shares with understanding of the product and market by providing coaching and economic information to make proper trading decisions. Investors are always looking for opportunities in the market, and today I'll be sharing on the CFDs on the various global indices around the world that is now offered for retail clients. Phillip Futures offers CFDs on US shares as well as local shares, and the number of counters available are increasing. There are also CFDs on cryptocurrencies such as Bitcoin and Ethereum. However, today's topic, the focus will be on global indices such as US indices, Asian market ones like Singapore, China, Hang Seng, and Nikkei. Exotic European indices, CFD, are also available. All the CFDs are traded on the convenient and robust MT5 platform. Throughout the webinar, you may have questions. As I said, just feel free to post them in the question box. My facilitator will arrange them and let me know, and I'll answer them during the webinar or at the end at the appropriate time. Before we start, a disclaimer on the webinar today. Materials provided here is for general information and does not constitute a recommendation or solicitation to trade. Okay, for the agenda today, first off, we'll take a look at the mechanisms of CFD to have a basic understanding of the product. After the introduction, we'll look at all the global indices CFDs available and their contract specifications. This will be discussing the margin to get started, the smallest price movement per tick, contract size, etc. Next, we'll see the pros and cons for using CFDs as compared to futures and ETFs, before you can decide to use futures or CFDs to trade global indices. The second part of the webinar will move into the technical aspects of trading. I'll be sharing on how to use candlesticks to gauge the price momentum, usually shared as part of both coaching. Candlesticks sometimes give hints on the stronger buyer or seller side. We'll be sharing some of my observations. After that, we'll take a closer look at certain popular markets on the current market sentiments by using some charts. Lastly, we will have a quick MT5 platform demonstration and answer some of the questions that you may have. So, what is CFD? CFD stands for Contract for Difference. As the name suggests, contract for difference is an agreement between two parties to settle the difference between the opening and closing prices of the contract. CFD allows you to participate in the price movement of an underlying product such as indices, commodities, and shares without actually owning the asset. CFD prices are derived from prices of the reference instrument quoted in the underlying exchange, market or liquidity provider, in this case, stock indices. Therefore, CFD prices will only be available if the underlying stock exchange or market is open, or if there is sufficient liquidity. Take note that no party holds ownership of the underlying asset. CFD contracts are leveraged to enable trading on margin. The amount of initial margin required to place a new trade is only a small percentage of the total contract value. As leveraging provides you with the ability to use a small amount of capital to control a large amount of assets, you do not need to come up with the full margin, full capital for it, but merely a percentage, example 5%. So it can be a double-edged sword, and you need to be aware of the risk of this leverage trading. If you think the price of a particular underlying stock indices will go up, you can buy and benefit from the rise. This is referred to as going long. Holding a short position or shorting refers to selling the contract first and buying back at a lower price later. Holding short positions allows flexibility in trading opportunities, even when markets face a decline. The profit or loss you make is the difference of the entry and exit price and the direction you have picked for that trade, hence the term contract for difference. I hope you are following so far. Next, we'll look at the global indices CFDs that Phillip Futures offers now on MT5. Important things to know about the CFDs you're trading are namely, first, contract size, second, minimum tick movement, the margin required, and trading hours. First up are the three US indices shown at the top of the table, Dow Jones, S&P, and Nasdaq. The contract size are all standardized as one lot or one contract. This means that you can actually enter only in one lot size. You can also enter in multiple of this one lot size, 2 lots, 3 lots, or 4 lots, and so on, but you cannot do 0.5 or any fraction of this unit. The US indices are all 1 USD per point of the index. For example, the Dow Jones Index is around 34,100 at this moment. A 1 point movement from 34,100 to 34,101 will be a 1 point increment, which is equals to 1 US dollar. The smallest tick movement is 0.1, so that means that 0.1 is equals to 10 cents in US terms. Margin required is about 5%, is 1,700 US dollars. Because the margin is a percentage calculation, the margin required will fluctuate according to the value of the index. Trading hours are almost 24 hours, Mondays to Fridays. Second, the US index's S&P is also very similar. 1 point movement of the index is actually 1 US dollar as well. Smallest tick is 0.1 equals to 10 cents US dollar. Margin is also at 5% at about 205 US dollars. It is lower because the S&P is about 4,100. The third US index, Nasdaq, 1 point movement is also 1 US dollar. Smallest tick is 0.1 also, equals to 10 cents. Margin required is also 5%, which is about 690 US dollars. Next two are the European indices, Euro Stoxx 50 and German DAX. Both contracts are also standardized as 1 lot each. 1 point movement in the index is equals to 1 euro dollar. Not US, but in euro dollars. The smallest tick is 0.1 is in euro cents, is equals to 10 euro cents. Although the price movement is in euro, it will be converted and shown as USD in the MT5 platform, as the platform is USD based. The margins for the European indices are higher at 10% of contract value. So for Euro Stoxx, it is about 474 US dollars, and for German DAX is 1,812 US dollars per contract. The trading hours are as shown. It is also about 8:10 Singapore time to 4 o'clock the next morning. There's a 4 hours break before the reopen. Trading hours are only from Mondays to Fridays as well. For the UK FTSE, it is 1 British pound per point. Smallest tick 0.1 equals to 10 cents. Margin is 10% or about 950 US dollars. For the Hang Seng, it is standardized as $1 as well, but in Hong Kong dollars per point of the index. Margin is at 10% or about 370 US dollars. Let's take a quick look at the other contracts. Next, we have the MSCI Singapore Index CFD. The point value is different at 10 Sing dollars per point. Currently, SiMSCI is about 352 US dollars, so that would mean the contract value is about 3,520 Sing. Out of which you need to come up with 5%, which is 135 US dollars to start a contract. Smallest tick movement 0.1 is equals to 1 Sing dollar. We also have the China FTSE A50 CFD. This is based in US dollars. It's 1 US dollar per index point. China FTSE A50 is about 17,100 points right now, so the contract margin is also high at 20%, of this which will be about 3,426 US dollars per contract. For the Australia index, it is also a $1 Aussie dollar per point of index. Margin is 532 US dollars. The next 4 European indexes includes France, Netherlands, Spain, and Switzerland. It's all $1 per point of the index. Margins are shown in the table. France CAC index is 735 US dollars. Netherlands AEX is 1,695 US dollars. Spain IBEX is 1,020 USD, and Switzerland SMI is 1,336 USD. As you can see from the contract specifications, the contract size is pretty small. It is all standards as one lot with 1 point of the index equals to $1 of the currency. The margin required varies from 5% to 20%. So with a small amount of few $100s, you can start trading with one lot. This allows most retail clients who wish to get started on stock indices to be able to do so easily, allowing more flexibility in the contract size than any of the other choices such as ETFs and futures. This is perfect for beginners who actually want to try out with small sizes first. Next, you can actually choose a contract that you wish to close first. You can even hold long and short positions at the same time. This is known as hedge positions, meaning holding opposite long and short positions at the same time of the same CFD contract, simultaneously without closing out each other, is referred to as hedge. The ability to hold hedge positions offers opportunities to take advantage of differences in direction view across the short term and the long term. Unlike the first in first out matching system that is being used for futures trading, you can choose in particular which contract to close out individually and separately. If your trading strategy is to take profits on the short term on profitable trades first, you can do so and close those short-term trades and hold out the losing trades which you might foresee in the long term will come back and recover. This simply gives you more choice in which trade to hold or close. Next, this is a zero commission platform. This means there's no commission fees for each trade you do on the MT5. Your P&L will be the difference of your entry and exit price minus the swaps incurred, which I'll cover later. This makes it as cost-effective as futures, cheaper than ETFs. As I mentioned, it is a bidirectional product. So while ETFs are not bidirectional, you can only buy the position. CFDs and futures allows you to trade in both directions of the market, depending on your market outlook. Due to the zero commission, for the intraday trades, the CFDs on MT5 is a good choice as swaps are not incurred for intraday trades. Yes, you heard that right. For trades that are closed before 5 a.m. Singapore time, it will be considered intraday trades and there will be no swaps incurred. For longer term, you can use micro index futures instead. The ease of trading is also round the clock from Mondays to Fridays. You can trade in the day as well as in the evening. CFD contracts have no expiry dates. This means that you can keep CFD positions open as long as you wish, subject to meeting of the margin requirements, and there's no need to manually roll over the positions. You can hold it as long as you wish. It is important to note that CFD prices can be impacted when underlying contracts roll over in the futures market, as the underlying assets tends to experience greater market volatility during the rollover. Right. Next, let's move on to the calculation of swaps for CFDs. Right. At the end of each trading day, open positions that are not closed in your account will be subject to a charge called the holding cost. The holding cost can be positive or negative, depending on the direction of position and the applicable holding rate. Sometimes the holding rate is negative for both the long and short directions. The applicable holding rate differs across various underlying assets and is a function of the following: financing costs based on the benchmark rates, as this is a leverage product, so there are financing costs incurred, interest rate differentials, the cost of carry adjustments, dividend adjustments, that's for share CFDs, and markups. This is all transparent and available when you open a live account. On your MT5 desktop, in your live account, simply log into the MT5 platform, right-click on the contract name in the watch list, and select the term specification. You can then scroll down and look out for the swap long and the swap short that's indicated. So for the swaps for a day, it will be shown inside the MT5. The value shown here divided by 10 is the one-day swap paid or received in absolute US dollar terms. So just to take note, for the weekends, Fridays to Mondays, position held over Friday is a 3-day swap. As I mentioned, if you are doing intraday trades and you close it out before 5 a.m. Singapore time, intraday trades do not incur any swaps at all. Besides swaps, there are also certain risks to note for CFDs. One of which is liquidity risk and the risk of trading suspension. CFDs are not traded on the exchange, but traded over the counter (OTC) basis, which are subject to the availability of buy and sell prices and volume. CFD traders may sometimes experience insufficient depth of market liquidity and a wide bid-offer spread when the underlying markets are experiencing volatility. So you can find out more about this using the link shown here at the bottom. We have finished the first part of the webinar. We'll now take a 30-second break before moving to the second part of the webinar, which is gauging the price momentum using candlesticks. So we'll take a 30-second break for now. All right, let's continue. Well, candlesticks is actually a useful tool in trading. It provides a lot of information about the buying and selling, support resistance, the historical data on reactions to price levels using this support resistance, which can be used to decide on the entry and exit levels. It is not a technical indicator per se, but it does give hints to the price momentum or the price action at that point in time by using different time frames. This means using 4 hours gives hints for the next 4 or 8 hours how the market might move, and using daily charts will give hints on the day-to-day movement of the market, which is a longer-term perspective. You can also gauge what the price bias is, whether it's to the buyers or to the seller's side in the next 4 hours or daily by using different time frame charts. This is done because candlesticks record the movement of the price and display it via pictorial view of its shape and size. It is as if it is giving you a quick briefing or update, if you may, of the price's movement without you having to constantly watch the market. However, it takes time to observe and learn from experience what the movements mean. So today we'll be sharing some observations today on certain hints candlesticks reveal about the market scenario and price direction bias. Let us first explain what a candlestick comprises of. For those who already know, let's just do a quick recap. The candlestick is made of the body and the wick. There are 4 pieces of information you can get by just looking at the picture of a candlestick. These are depicted here as open, high, low, and close. For example, let's assume the candlestick here is formed from the daily time frame, which is the daily chart. Starting from the wick, the top end of the wick is the high of the day, and the bottom of the wick is the lowest price of the day. And the market reached open at this level and close at this level over here. The body is made out of different colors, typically blue or green, and red for down candles as used in this example. Sometimes it's also shown as a hollow or a solid candlestick. Whichever the case, you can tell whether it's an up or down candle and determine the open and close accordingly. For example, the red candlestick on the left indicates the opening price of the day with the top of the body, and it's closed with a lower base. Over here, there is the lower part, there is the closing price of the day. Conversely, a green or blue candlestick or hollow candlesticks in some charts is shown as up day. This means that it is reversed. The base of the body is the opening price, and the top is the closing price. In summary, it just shows you 4 pieces of information in one pictorial view: the open, high, low, close, through its wick, and the color of the body. That's the basic, but most importantly, it also shows other information with the length of this wick and the length of the bodies, which tells you the strength of the price movement. Let's take a closer look at one of the most popular candlestick pattern out here. Shown here is the hammer candlestick. It looks like a hammer since it looks, hence given the name the hammer candlestick. So you can see that this candlestick is a bit biased to one side as the body is not centered. So which side is it biased more to? More to the upside, right? It has a very long tail and the body is located more on the top side of the frame. Just by looking at the shape and size of the candlestick, you can quickly tell that it's more biased to the upside without even looking at open, high, low, close prices. Let's look at it anyway to understand what is going on in this candlestick. In this example, let's assume this is a 4-hourly candlestick, means it represents a 4-hour movement. Instead of the whole day in the case of the daily candlestick before. This depends on the time frame your chart is using. So we are assuming this is a 4-hourly time frame. Just a quick one, you may want to look at multiple time frames to analyze both in the long term and shorter term. Right, back to the hammer candlestick. For example, assuming this 4-hour candlestick started from 12 o'clock and it ends at 4 o'clock. So at 12 o'clock, it opened at the top over here, reaching a high as shown by the top of the wick, which is very close to the top. And then it's close to the opening price, and at the lower end is the bottom of the wick. It then finally closed at the base of the body over here. But from looking at the candlestick, you won't be able to know how the movement was like. Let's break down this to the 1-hourly chart from 12 to 4 o'clock. On the right is the breakdown 4-hourly candlestick. On the left, each candlestick depicts an hour. So the first long red one is 12 to 1. The second one is 1 to 2 p.m. The third one 2 to 3 p.m. and so on. Now you know the full story of the movement. The price opens at 12 o'clock at the top, reach the high shown by the tip of the wick, and collapse quickly in an hour. The next 3 candlesticks show a fight back of the prices in 3 hours, cancelling whatever grounds the selling has attained and pushing it back close to where it started. As you can see, we are doing an analysis of the buying and selling here. This is also observing the price momentum, which is looking at the buying and selling forces strength and determining which side is the strongest side in the situation. In this example, there's a fierce rejection of the sellers when it reached the prices at the bottom, and the fight back was strong to push it back to where it came from. However, there's conditions for the hammer candlesticks that you have to use. It's just hinting that the buyers are strong and rejecting the sellers. It merely pushed it back to where the sellers came from. It made a good defense battle against the selling, but no new grounds were gained in that candlestick. Now it's time to observe the next candlestick to see if the buyer can do an offensive attack and advance to higher prices territory. This is the follow-up candlestick that will be the confirmation. Let's look at the scenario depicted here on the Nasdaq chart. This is the daily chart. Each candlestick depicts a day. The circle candlestick is a hammer right over here. The confirmation candlestick is the follow-up candlestick, showing a push of prices by the buyers, implying high probability that buyers might win the engagement. But the battle is not over. The second candlestick is a second attack by the sellers towards the level it tried to reach, shown by the lower end of the wick of the hammer. But it's not quite there yet. In other words, the second push by the sellers was lackluster compared to the first one. Why is it so? What is so special about this level of price that sellers fail to push through? Looking back at the historical chart, we can see that this level over here is a resistant trend support level. Previously, it took the buyers 2 attempts to breach and finally did it and even do a retest of the support over here. Candlesticks also show you support resistance, as shown by the line that I've drawn over here as support resistance. The breakthrough and the retest of support level here. If you wish to find out more on how to use candlesticks to determine support resistance levels, feel free to sign up for the one-to-one coaching. The QR code will be shown later at the end of the webinar. Continuing with the price movement, afterwards, the selling was once again met with defense and counter-attack of the buyers. This time, the sellers relent this range over here and prices push higher. So the sellers actually tried to fight back over here as shown by the candlesticks. But then, finally the sellers relent and the buyers managed to push higher, right? So in summary, you also need a confirmation candlestick after the hammer, right? And it's important that hammers form at a support level, as this forms a good base for the defense, as shown over here, and the counter attack from the buyers. Next, what if this is a different scenario where the prices are all in a tight range? How do you use candlesticks to gauge the price movement and pick the winning direction? Before we do that, let's do a market situation analysis of this chart. Example shown here is the China A50 daily chart. It started off with heavy selling and the prices hit a low, which triggered the buyers coming in to put a defensive fight. Right over here. Subsequently, the battle is on as buyers and sellers fight out in a long battle, which is in this range over here. This is shown here by the volatility of the prices and the ranging in this black box. But we'll try to comment on the price momentum over here inside the black box. Firstly, these are scenarios where the prices are ranging. It always starts off with a lot of volatility, meaning there's a buying and selling in both directions of the market. There's a lot of up as well as down price movement and the bodies are still long. You can observe the strength of this volatility, and in general, the longer the strength, the longer the body, the stronger the strength of the movement. At the beginning of the range, both sides have a lot of participants and there'll be lots of buying and selling candlesticks on both sides. The fight will almost taper to flat bodies before a direction will be taken, which is after one side gives up the defense. So you can see here, the bodies was actually long and it turns out to be flat. And after the bodies turn flat, a direction will be picked and there'll be a winning side. So when volatility is still going on, the direction usually will not be picked until the bodies go flat. At this point in time, we are fighting in the upper portion of the range and sellers are making a defense. The sellers then reignited the pushback, the buyers do not relent. So the selling started, but the buyers do not relent. Volatility starts to pick up again, and we'll wait for the volatility to taper off in the flat candlesticks over here, and wait for the push again. This time, the buyers started the offensive attack, and the sellers gave up defense. The buyers win this battle and picks up the momentum to advance into the next territory, as shown at the big movement. After moving a certain distance, buyers approaching the next resistance, and sellers decide to defend the prices here. Volatility picks up once more, but this time it tapers off quickly. By this time, buyers have been winning and sellers seem to lack the power to fend off the buyers from the resistance. Even as prices get closer to the resistance levels, notice that volatility did not pick up and flat bodies continue to show. This means a push is going to occur and it will be the buyer's side. True enough, after which the buyers make an offensive move, and this time it gained a lot of ground, and sellers have already exhausted in the defense battles that's done in this range over here. So the first point to gauge price momentum is gauged in the ranging market is to observe the length of the candlestick's body. The length of the candlestick body will be long and it will taper off the flat bodies before the push will be made. Next, besides the length of the bodies, the length of the tails can also hint on the direction bias. Using the example of the Dow Jones CFD's daily chart, prices have broken structural resistance and did a retest of the resistance turn support before going into higher territory with a lot of volatility and ranging. Let's use this part over here as our case study, as in the black box. With so many long candlestick bodies, before it tapers off to flat bodies, you can also observe the length of the wicks to determine the direction bias. The range movement started out with almost equal body lengths, and the wick length showing the battle is pretty even. Subsequently, the body lengths are still equal, but the longer wicks are formed at the bottom of the bodies. So you can see here, there's a longer tail formed at the bottom of the bodies, hinting a strong rejection of the sellers by the buyers. The rejection of this at support level is especially long, after which the buyers manage to push through. It may not always be accurate to say that the side with the longer wick actually has a better strength, but it's actually a good assistance to give a heads up on the buyer's advantage. You can then decide to pick the direction for the push, whether it's to the upside or the downside, after the flat bodies emerge. Now we have covered on how to gauge the price momentum. Let's take a look at some stock indices examples and see what are the sentiments on the market right now. First up is the S&P 500 CFD. We'll be using all the daily charts to see the longer term sentiment. The S&P 500 has been an uptrend since March 2020 last year after the COVID package comes in. When liquidity has been injected into the markets, the moving average 50 shown here trails nicely behind the trend. So it's still a trending market. From the left of the chart, it broke out of the pennant and has started on a steady rise ever since. Recent movements show that volatility swings are occurring at the right-hand side of the chart, as shown by the long candlestick bodies. I would define the immediate range of this swing for last week to be in between 4,056 to 4,182. The near-term range of this movement will range further up to the recent high about 4,245. As you know, Dow Jones, all the markets went up today. The recent movement started with some heavy selling as indicated by the long wick candlesticks. Buyers then make a defense and push back from around 4,060 level. Sellers try again a second time, and on this second attempt was yet strongly rejected, as shown by the hammer candlestick shown on the sheet. This shows that buyers are holding strongly the level of 4,060 at this moment. Currently, buyers are pushing towards 4,182 and would attempt to push past this level. If it succeeds, which it did, it will try push towards the all-time high. But sellers are expected to come in and defend around the top, which is about 4,180 first. For now, volatility is still expected within the broad range of 4,056 to 4,182. In the bigger picture, in the event that the immediate support 4,056 is breached, which is not likely at this moment, prices most likely will sell off and head towards main support at 3,726. It is advisable to reduce positions if the 4,056 level is breached, so you have to watch carefully for the break of this trend movement. But currently, bias is still towards the buyer's side. You have noticed that the indicator is also used in this chart, which match the swings quite nicely. This is the chandelier exit indicator, which is using the ATR average true range as the trailing stop. The default settings are also being used here. The plateaus in this indicator will act as a support and resistance levels. So the next US indices is the Nasdaq 100. This is similar to the S&P in the sense that it also shows a recent hammer review itself and the buyers reacted strongly. So this is actually a bullish sign as well. Overall, the scenario in Nasdaq 100 is more established than S&P, as you can see here. There's a wider range of movement that's consolidating and a series of higher highs and higher lows over here. So the consolidation is more established, giving it more re-establishing of support and consolidation. The main range of this movement is 12982 to 14030. Is currently where the prices will be at. 13639 is the middle split into the upper portion and the lower portion. So this line over here splits the whole range over here into the upper portion and lower portion. Obviously, we are in the lower portion of the range right now. Buyers are still showing more strength at the point as indicated by the hammer, right, over here. There's a bullish candle confirmation, the follow-up candlestick as we mentioned that you look out for. And then, as you know, the market today actually went up further, right? So that is why hammers at support levels is actually a very good indicator for the buyback. It has to be at a support level, of course, to form a defensive base for the buyers to act upon for the attack upwards. So the main support is at 12667. It will be a phase change to deeper correction if this breaks. And if that does happen, which is unlikely at this moment, because the 200 MA is still very far away, right? Usually we use the 200 MA average shown here as the telltale sign that the trend has reversed. So this has not been reached. So the likelihood of moving further upwards to test this resistance is higher as buyers are in control right now. So that's for the Nasdaq 100. Next, I'll look at Dow Jones. Also similar to S&P, right? But this is a more similar one. The buyers are also doing a good defense battle from the 33,591 level, right? So you can see somewhat of a long wick over here, shows that it's propelling the movement upwards. So the swing up could be reaching towards 34813, which is shown on the by the red line over here, right? So this is the resistance level or the target for the first target level. And this will be the range for the swings for now until one side emerges as the winner. As you can see here, I've used the trend line also for trending markets. You can use that to provide support, and the trend line has not been broken. It has been up ever since March, actually October last year, right, this movement. So I would say still follow the trend, and the dip here is actually an opportunity. The main support 33,033 has to be monitored as the breach of this support level will be a significant move lower towards 30,000. So the main big psychological support is 30,000, but there's a very big support before that at 33,000. Overall trend is intact, but there's been no correction so far, unlike the Nasdaq, which has consolidated. So the probability of correction is still now not obvious at the moment, as everything is still very within the trend and nothing has been breached yet. So I would still say that short term, it will head towards 34,813 as the main target area to test the resistance. We also look at the China A50. Over here, you can see the China A50 actually shows a bottoming out pattern. Price momentum remains weak. The range of this bottoming pattern is from 16614 to 17762. So, but be careful with this such bottoming patterns, because this means that as you can see here, the movement, there's 100% retracement from the move from here to here, and then retrace 100% up. So when that happens, typically we tend to stop the selling. As you can see, there's even more retracement back here, which covers by this blue candlestick over here, which is a very long body, right? So this indicates that the buyers are coming back, and as of today, it has actually already breached this level here. Although there was this red candlestick over here that's pretty long, but compared to this one over here, it did not manage to push into this territory, and it managed to break out today. So the length of the bodies has been taken in comparison with one another by the buyers as well as the seller sides, and you compare which one is actually showing more power. So the longer, the more strength that it has. So I think it will head towards the next level, which is shown by the red line over here. That's the first resistance level here, hence the first target level. If this breaks, quite a tough resistance, as this is a double resistance over here, then it will head towards this higher level over here. But for now, it has broken the range, and depending whether it's a false breakout, but most likely looks like it will be heading towards this first target level over here. So for Hang Seng, which is coming up next, is also showing off a bounce off of the NUS support at this level, 27,846. So last week also, the Hong Kong holidays are preventing a decisive upside movement to build up any kind of speed, with the doji showing over here. But today, like the China A50, the blue candle emerged, which we'll see later on at T5. So it pushes through, and I think it will be heading towards this range over here at 30,095, a retest. But before that, of course, the resistance level is about here, over here, and it will be still within this range until this breaks. Okay, so that's for the Hang Seng. We have almost come to the end of the webinar. I hope you found the info useful. Let me just go to the trading platform demonstration first. So this is the MT5 platform, quick orientation. As you can see here, the prices are shown over here, the chart is shown over here, and the trade menu is over here. So to start off, you can go under the view and then click on symbols. This will be categorized into different categories. The CFDs are over here, and the topic today is indices, so you can see all the indices shown over here. To add, those added ones will be in yellow. You can just double click to remove them, right? And you want to, then you just double click on it as well, right? Those with charts open, you cannot remove them. Yeah. So this is how you add the codes into the watch list. Once you add it in, it will be shown over here. So from here, you can double click on the, let's just pick on any one, maybe the Nasdaq, to open up the trade menu, right? Currently, the prices are shown here. The contract size, as you can see, is one lot. You can't do smaller than one, but you can do in multiples of one, right? So for this, you can click on buy or sell to have a market execution, exchange execution. If not, you can queue for the price you want also. So in this case, depending order, until the price you want to queue for using a buy limit order. For example, the market is doing at 13718. You can queue for it at 13716 maybe. Right now it's at 17. I'll place it. So once you've done that, you can see the prices are shown over here. 13716 is the price you're queuing at, and the market price is working towards that. Once the price over here actually comes down to 716, the order will be done. Right. So it does not. I'll just cancel it. Any point of time you want to cancel it, you can just simply click on delete over here and then delete it. So to execute a market order, I'll go inside here, I change it to exchange execution. I'll buy one lot at market at 718. Just click on the buy button, and you can see this tie appears above the account information, and you have entered a market at 13718. So you can set a stop loss and target profit over here. Maybe you have decided to take profit, maybe just for example 14,000, you can set, and the stop loss, if it breaks below a certain point you want to, just for that illustration purpose, you can also fix it. So when the market swings and reaches the price level that you have depicted over here, it will actually close out with a stop loss or with a take profit. So you can click on the modify the order. Take note that every order you have position you have is by the order ID. So you can specifically close out this order ID that you want to do. So let's just do modify over here. So as you can see, I've installed the stop loss at 13,000 and the top profit at 14,000 over here, right? And now you can actually go to sleep or do other things while the order actually working for you. So to close out immediately, you can look at over here the profit over here. Once it turns blue, you can close out. This is mainly the spread. There's no commission, so the value is here is directly what you get from the closing of the trade. The swap points over here will not be calculated until you hold a position over 1 day or 1 day swap. Right? So this is a quick show on how you do that placement of trade. And we have the demo version that's readily available for you. If you're interested, you can just sign up demo with the QR code, which I'll show you later. Right? So that's the trading platform demonstration. We have almost come to the end. I just hope that you have found the info useful. Let me just touch on the available services offered by Phillip Capital. If you sign up the account, which is available online using my QR code that will be shown later, I'll be providing WhatsApp economic data updates every week. There will also be technical discussions on trades, and I'll be assisting you with any questions pertaining to your account or trading. I cover markets on the Forex, the Global Indices, Precious Metals, Energy, and Commodities. You will still be executing the trades through MT5 or the mobile platform, but you have a second perspective on the technical aspects, and I'll let you know what my observation is on the technical movement of the market. Right. On top of that, our in-house analysts also have this trading research reports. These are technical reports that suggest the levels for your reference. This will be emailed to you every day on the indices futures to assist you in making decisions on entering at the better levels. Right. On top of that, there's the fundamentals to cover as well. So this is done by our daily commentaries email. We have the commentary reports to give you updates on the economic news that's happening around the world. This will keep you updated on the latest economic news that might have potential impact on the markets. It will save you the work of actually looking out for this news on yourself on the internet. Hence, we provide the fundamental and technical aspects of trading information to you, and you can have a platform ready when you want to enter the market anytime you want to. So besides this analyst reports, of course, you can reach out to me via WhatsApp or emails, whichever is convenient to you, on the technical views on the trades as well. Right. Just a quick one to open the account. Trading indices on CFDs on the MP5 is actually commission free. So intraday trades do not incur swaps. If you are interested on stock indices or any other products using MT5, you can open a live trading account with Phillip Futures at no cost at all. There's also no admin fee in establishing the account or maintaining the account. If you are opening an account with me as your servicing AE, I also conduct a one-to-one coaching with you via Zoom. Currently at our office is not can't be arranged, but after the COVID, the entry level is low with a few $100s. You can start trading for the margins for each lot of the stock indices. So entry level is quite affordable for most retail clients. Most importantly, you have an account readily open without funding. You can fund it in a little bit, but you have access to the live price movement in the market, right? So as I mentioned, there's no admin fee for this opening or any cost in maintaining account. The process is actually easy via SiMSCI and can be done quickly within minutes. Simply create an ID by scanning the QR code which I show you, or right now it's shown at the bottom. You just need to prepare a bank e-statement showing your bank logo, your name, and your bank account number to verify the bank account for withdrawal in the future. Other details of this can be left out, so you can open it online via the QR code shown. This link will be tagged to me and I'll be assisting you. There will be no additional cost even if you sign up the account under me. It'll be as if you are signing out of the house, but with an established account executive assisting you. Right? So foreigners can also open this account online using this QR code. But if you have further queries, just feel free to drop me a message or email. My contact information will be given at the end. So these are the top 5 global CFDs that have been traded for us at the moment: the SPX 500, the Nasdaq 100, the Hong Kong, the Dow Jones, the China A50. So all these are zero commission and no platform fee at all. So if you refer a friend, there's an 88 referral fee or $66. This one is for your friend who already has an account with us. So you may tag him during your account opening. Just use the QR code and indicate his trading account number in the remarks during the account opening. Your friend will receive the referral fee when you do any one trade within a month of the opening. So we have come to the Q&A session. Let me just see if we have any questions for today. Right, the first question is, the demo platform free? Is there a fee needed to register for the demo platform? Yes, the demo platform is absolutely free. So if you wish to try out the demo first, just use this QR code over here, right? Scan me, this Phillip MT5 demo, and you can use this as long as you wish, and there's no timeline for it, and try out the platform until you're comfortable. Or if you want, you can also start the opening account, which is also using this QR code over here, right? Using SiMSCI. Does MT5 has any indicator aid new trader? Right, MT5 is a very well-established platform with a lot of indicators, and there's constantly a lot of new. Even if the indicator is not in the default, you can actually download also using the MT5 website, right? With this established, I can guide you on how to add those indicators that you want that you have located into the MT5 platform. It's simply just downloading the code and then putting inside the folder of this installation, and you can use it. But most of the indicators, the frequently used ones, are all found on the MT5 platform. So what is the commission rates for trading CFDs? As I mentioned, there's no commission rates at all. It's all zero commission. So you can place any trades. The entry price and the exit price difference will be what you're getting, right? And there's no the only cost that's incurred is actually the swaps, which is for the overnight trades. So if you do intraday trades, you close out within the day itself or before 5 a.m. Singapore time, basically there's no cost at all, just the difference in the entry and exit price. Is there a fee for your coaching services? Yeah, the coaching services is free, but you can sign up using the live account, and we'll get in touch with you. So what I do in the coaching is typically I will do a technical sort of online seminar on with you, right, one-to-one, and then answer any of the questions you may have regarding trading, right? And currently we can't do it in the office because of the situation, so it will be done via Zoom online, and it's actually free. But you can sign up for the live account, and it will be a session can be arranged. So the next question is, do you offer cryptocurrencies? What are the crypto contracts available? Okay, this is a very popular product recently due to the volatility, right? So as you can see, you can actually sell the cryptocurrency over here as well. And let me show you where it is located. So right now we have the Bitcoin. What are the others? We have the Ethereum, right? You can go under symbols, crypto, right? Right. All these are the available ones. So we have Ethereum, Litecoin, Ripple, right? That you can trade. And right now, yeah, you can trade in micro sizes for the Bitcoin as well. Yeah, this is also available in the demo account. So if you want to have a go at it, buy or sell and see how it goes, you can try it as well. Maybe I'll just do a quick trade for you to take a look. So I click on buy, right? The smaller size here, the price movement, you can see the profit and loss here. So this is all live. The demo price is exactly the same as live price. You can try out buying and selling as well for the Bitcoin. Okay, let's see what other questions we have. For intraday trading, what time frame is suitable for technical analysis? Okay, these are very common questions like time frames and everything. I personally use the daily time frame definitely to look at the long term, to get an understanding of the big direction market, whether it's a ranging market, whether it's out of the range. So I'll have in my mind, for example, in this Hong Kong chart, I'll have an idea that this is the range I'm at, say from here to here. So after that, yeah, the direction pick will most likely to be upside. I would not want to buy to sell at this moment. So even though it has already moved, it's still there's only a small movement here, right, to the upside. So you can actually think of it as resistance over here, right? And then if it is a false breakout, you can do a sell and let it test below. And after that, I'll go into the first 1 hour chart as my intraday trading, or you can even use smaller time frames to go into the momentum. But typically 1 hour is the one I use actually. Some people like to go into 15 minutes. That's all right. But to gauge the exact momentum using MACD, right, and now technical indicator to exactly see the momentum going, whether it's dying off. If it's very top, you will not want to enter the trade because it's too late. But typically the 1 hourly chart is where I will draw my support resistance levels for the gauge of the target levels. Right, so 1 hourly is actually for intraday trades, and I typically think that half a day movement is a better movement than those very quick 15 minutes movements, right? So let's see if there's any other questions regarding the platform, right? Right, I think that's it. There's no more other questions. So that's all the time we have for today. Feel free to drop me a message, or you can sign up with the demo MT5 or the live account if you want to get started, and I'll get in touch with you shortly. So thank you so much for staying with us all the way through, and the link to the recording will be sent to you in our follow-up email tomorrow. If you have any query on the webinar or would like to get started, simply reply to our email and I'll get in touch with you. So this is Phil Gunn signing off. Have a good evening ahead. Goodbye.